Alright, guys, how are you guys? I've been well, I've been very well. I want to break down a trade I took today, but it's not Nasdaq. It's not Nasdaq. I didn't trade Nasdaq, even though there was a really good setup here. Nasdaq had a really good setup here. This is a video for a market breakdown for the 9th of June. Yeah, I was expecting a sell here, man. I was expecting a sell. Couldn't catch the trade because of some personal reasons. Yes, this was a very good sell. You see, it's using the previous cycle, the 30-minute cycle low. Once it closes below, you can press sell and put your stop loss there and aim for for those lows, man. For those lows, Nasdaq made on Friday. Yes. The target was the lows for the target was the lows Nasdaq made on Friday. Oh, it's a new day already. Okay. The target were these lows. Actually, no, these lows. This was the target. It was a beautiful sell, man. It's too bad I couldn't participate in the trade. It was a really good sell. It was a really good sell. Probably right here. That's why you have taken the exit trade. But it's okay. So I traded gold. Let me just put in the gold chart. I also took an early exit because of personal reasons. Super bummed out about that, but it's okay. There will be more opportunities in the market for us to trade. Okay, this is the 1 minute. I had the same idea heading into the gold trade since DXY is very bullish because it is inversely correlated to DXY. So let me just zoom in for you guys right here. As you can see, guys, we had this amazing fair value gap in action. There was a fair value gap there. Let me put in 5 minutes and 1 minute. So what I like to do, guys, is to monitor my trades as they are happening, because I'm not really a person who does the set and forget method. I want to monitor trades so that I can fully engage with the market. So as we head on down to the 5 minute chart, okay, this is the low, right? Yes, this is the low. So as we head into the market, gold did some manipulation here. Not manipulation, price stall, as Zeus would call it, time distortion. It time distorted up until around 9:40. It traded the buy side liquidity resting above these highs. There's a lot of liquidity there. After it traded those highs, gold went into the daily fair value gap that I marked out. Okay, cool. That's good. We're seeing a lovely reaction. Boom. If I put on my dividers, you'll probably see something interesting there. I'm just gonna put the 90-minute dividers. Just gonna put the 90-minute dividers. Because okay, I will also put the lower time frame dividers because I traded after 10. 55.9. Let me make them white. This is These white lines are the 30-minute dividers. Surely you can see what's manifesting right here. What's manifesting? It's a good trade, guys. These are the type of setups you want to catch as a growing trader, as a person who wants to be a profitable trader in the future. So as you can see, price started to break down and it gave us this big push. This is ICT 2022 mentorship, guys. This is a break in market structure, and then there's a fair value gap there. 5-minute fair value gap. That's the FEG I used for an entry. Let's go down to the 1-minute, because that's where I was looking at the market by the time the 5-minute fair value gap was raided. When the market raided this 5-minute fair value gap, I pressed the sell button there. After this candle opened, I pressed it. My stop loss was above here. Then it went down, took my profits here because I had to be busy. So as you can see, the market, boom, went down, came back up for a retracement. We could have had another sell, boom, for our target, and then it went back to retest. I'm telling you, these are 15 minutes or 5-minute fair value gap entries. It's very easy stuff, but like, I've built a discipline that when price reaches my target, I don't chase it anymore. I don't even enter when I see a good opportunity, like for price to continue heading downwards or heading towards my initial direction. So as you can see, it's 15 minutes right there. I don't usually like using these fair value gaps because on a lower time frame, as you can see, this is a 30-minute. This is 30. This is 30. This is 30. This is 30. So on a higher time frame, actually, on a higher time frame, I know it's somewhat of a big long candle to the downside and then a small retracement. So what I like to do with this type of price action, I just like to ignore the fair value gap and then just wait for them to mitigate the higher time frame fair value gap. As you can see, there's no fair value gap there, but on the 15-minute there's a fair value gap. So heading into tomorrow and days after that, which is Wednesday and Thursday, I'm at least expecting price to come back to this section, give us a deeper retracement, and then continue with the sell. No, I don't want it to be on the daily. I want it to, oh, this is the first hour, 1 hour, 15 minutes, 5 minutes, 1 minute and 15 seconds. Okay. I'm expecting at least for price to do what? Let me add something here. What is this? At least for price to do that, then come back here, continue with the sell. That's what I'm expecting price to do. So that also brings us back to DXY. We have to go to the high time frame with DXY. We have to go there to the higher time frame because 3 months, I'm expecting DXY to trade above the last quarter high. I'm expecting DXY to trade above the last quarter high. This is my terminus for DXY on a quarterly time frame. But if we can look at this very closely, I believe DXY is heading for that fair value gap, and then if it goes deeper, it can go to that fair value gap also. That's where I'm actually looking for DXY to go. So when we head to the lower time frames, oh no, I have to go back and change them so that they appear on the weekly, daily. So when you go to the weekly, you can see DXY did shift structure here, and then it gave us a really good fair value gap setup here. That's when I started to notice that okay, DXY shifted bullish, and also it gave us another nice fair value gap here, which Friday's news made it trade higher, clearly aiming for the previous quarter highs. Okay, let me just edit this one. Okay, it's good. So today was a really good day for DXY. As you can see, it traded to that fair value gap, so we can safely assume that DXY is headed for that high. When the market opens, we can safely assume that DXY is really headed for that high, and then reaching the terminals there, and then probably think about a retrace into the zone, and then continue with this objective into that fair value gap, because as you can see, there's a lot of liquidity here. With this high and this high too, so I'm looking for that to be rated. Let me put a magnet there so that I can remember. Triangle, no. I don't see the magnet. Oh, okay. Surely there's a magnet here. There's no magnet. Oh my god, bro. Okay, let me just put a flag. There's not even an eye here. Let me just put a flag. So I'm at least expecting the XY, not all time frames, daily. Okay, monthly, I can put it there, weekly. For hour, 1 hour 15, 5, 1 and 15 seconds. So I am at least expecting the XY to pull up there while gold continues with what? The sell. So we can go down to the 3-month chart for gold and look. Oh my god, bro, gold has been buying 3, 6, 9, 12, approximately a whole year. Oh no, bro, look at this. Look at this, man. Last year was very bullish for gold. Let's see, last 6 months. Indeed, very bullish for the last 6 months. Look at this, man. 1, 2, 3, 4, 5. Okay. I believe gold can retrace up to this level. I believe gold can retrace up to that level, because as you can see, gold will also aim for the previous quarter lows. Gold will aim for the previous quarter lows, so it's safe to assume that you can at least expect gold, if it does a deeper retracement, to end up at that fair value gap close right there. So let's go down to the monthly chart. The monthly chart, which will surely share some insight. As you can see, there's a low here, there's a low there, so we can chop that out. Yes, okay. Let's go to the weekly chart. Okay, beautiful price action by gold. Lex fair value gaps. Do you see that? Lex fair value gaps. Except this one, it made a big range which in turn told us, which in turn showed us that it's gonna go down. Okay, the daily, guys, the daily is very nice. The daily is very nice. Oh yes, and this day was a very good day to catch sales. This one, when it manipulated above that high, it was a really good day to catch sales. Today was also a really good day to catch sales. So I'm at least expecting gold. I'm at least expecting gold to retrace to that level. That level I marked. Damn, this was a really good sale, man. This was a really good sale. It was a beautiful sale. It was a really beautiful sale. It was a really beautiful sale, bro. To take it further, you can use the breaker setup from the 2022 mentorship. Look at that precision. Okay, so I'm at least expecting them to pull back there and to add more confluence. As you can see, there's a breaker there. Let me just mark it with there. There's a break. Wow, that's consequential encroachment. There's a breaker there. There's a breaker there, man. There's a break. Because this price leg certainly triggered that high and then created another high. So if you want to like be 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 very technical with it, you can use that break. But I use the lowest low from this price action, the lowest black candle or red candle in this case, from this price action before the down move. But bro, to show elite price action, elite point of interest, there's a fair value gap there, so we can expect them to retrace back to that level. And then when they do, I'm gonna repeat these vertical lines this side so that I can be able to catch a really good trade heading to the downside. This time I'm gonna hold it. I'm gonna hold it to this level. I want to see this level get swept, but it will take time. It will take time depending on how tomorrow's trading goes out. No, not goes out. How tomorrow's trading plays out. I want to see how it will play out from this level heading into that retracement point, our POI. I know it's a lot of lines and stuff, but if you really follow them, they will show you the pathway that gold will make going from here to here. So from now, what I would do, I would go into a lower time frame and I would see this as a probably buy opportunity. Hence price is being manipulated here, is being held in a range, but it can also dip before going high. It can also dip here, take liquidity, go high, or its counterpart can dip, go high, which is a silver or platinum, can dip while gold maintain this price level, forming an SMT, and then it can rally up. But the most important thing for us, if you want to catch buys, oh my god, man, finally, the most important thing for us if we want to catch buys is what is going to happen in this level. In this level, once they close above it with a fair value gap, we know they're gonna buy. So we wait, we sit on our hands, we wait, and then let it buy, and then we enter a trade there, and then we all good, we all set up. Now we can also use this as a reference point also when to trade above it. When to trade above it with a fair value gap, they usually do this thing. They usually manipulate very rapid. They use a weak like rapid manipulation, and then beginners, they think, okay, gold is buying now. They buy, their money is trapped in those buys, and then eventually, if they don't close the trades on losses, their account is blown. Their account is gone. So, with that being said, the most important thing for me right now is to just observe gold, what it does, if and when it retraces to our point of interest, hopefully by tomorrow, because there's high impact news on DXY. Let's open DXY. This is good price action, man. This is really good price action. Look at that. From 7 a.m. New York time, as anticipated, DXY sold. Sold, man. Sold into that daily fair value gap. I was tracking it with this. I knew once they close above this fair value gap, see, it gave us a fair value gap again here. Once they close above this inversion fair value gap, that created a lower low. I knew it, man. They're about to buy. But it was choppy price action on the 5 minute, but on the 15 minute, it's really nice price action, man. So at least tomorrow, we can expect them to take out this 90-minute session low. As you can see, from this white line to this white line, that's a 90-minute session. We can at least expect them to trade below that 90-minute session, or even better yet, to give you a very good discount. Trade below this session, this one, from the 11:30 to 1 p.m. and 1 p.m. 90-minute cycle. They can trade below that. Foam trading there we go, giving us a really nice discount to buy the XY at a cheaper price and sell Euro USD at a premium, so that you can make more profits, and also sell gold at a premium. So it correlates, everything correlates, everything correlates. But as you can see, it will open and jump right here. It might take at the highs, come back, come here, then, excuse me, it might take out these highs. Let me mark them. DXY might take out these highs, make a double top, retrace into fair value gap, and then with the okay, damn, I said I'm gonna open this. What is it with the CPI coming out tomorrow? This is the CPI. Why doesn't it show? Is it the CPI? Economic events. This is the CPI. CPI is supposed to show here. Okay, it won't show. But CPI is supposed to show. So with the CPI coming out, I'm expecting another up close candle for tomorrow and Thursday. I'm expecting that type of price action. Yeah, I think that's about it. It's getting late now. I have to sleep. But overall, it was a good trading day today. I'm expecting the same with Nasdaq returning back to that breaker. Confluence with the fair value gap. Nope, not that one. I'm expecting the same, retrace into that level, continue with the sell. Yeah, there's a lot of fair value gaps that need to be filled. There's a lot, especially on the monthly time frame. Especially on the monthly time frame. I'm looking for Nasdaq to head down into that fair value gap. Daily, weekly, for 1 hour, 15 minutes. So I'm expecting Nasdaq to just sell, man. This was a good sign. Took out the lows, retrace back. Tomorrow it might open and head here. Let me just do this. Sure. Let's check it from a lower time frame. Ah, bro, this thing might open and just head there. There we go. On the consequential encroachment of the 1 hour fair value gap. Damn, bro. And then, like, probably just sell. Probably just sell. Just wanted to scratch the itch of trading this to get lost there. It's okay, man. This is demo, bro. But when it comes to real money, I'm very serious. I don't play with it. I don't play with it. I have to make it out, man. I have to make it out. I have to lock in, bro. I have to make out. I have to make it out, bro. I'm in the trenches, bro. In the ghetto, man. Yes, I was scratching an itch here. As you can see, decided to take out these lows because previous cycle lows very significant, and then made a, we can call it, is it a 5 minute? It's a 5 minute fair value gap there. It failed to create a low. Let's see if USDT create, not USDT, US 500 created a lower than this one. Let's see if it did create a lower than that one. Yes, it did. Man, this is funny now. I can see it. I can see it clearly. So, with that showing in our charts, we know this is an SMT, guys. This is clearly an SMT. And then we head down to the 15 seconds. That's how you'd catch a buy there. Head down to the 15 seconds, not this one with NASDAQ. Because NASDAQ failed to create a low lower than that one. NASDAQ failed to create a low lower than that one. So that's SMT. As soon as NASDAQ does this, as soon as it goes above this high, the fair value gap on the 15 seconds, you place your buy there. Place your buy here. Stop loss there. Place your buy. Let me just put it there. Yes, place your buy. Not that high, man. Just want this high. Yes, you place your buy there. Man, that's a good trade, man. That's a good trade. That's a really good trade. You can even minimize your stop loss to this point. That's a good trade, man. That's a really, really good trade. That's a really good trade. Let me just keep it there. Nope. It's only on 15 seconds. Yes. That's a good trade, man. Because of that SMT. Oh, if you're really plugged in, if you're really locked in, if you're really, really locked in, and you saw what it did there, you can look for this SMT also. If there's an SMT there, there's an SMT here, you can catch a buy from here. If there's an SMT there, because how I usually track these markets, when I really want to catch a low risk buy, like on the 15 seconds, I just pull up the 1 minute, bro. Just pull up the 1 minute. This is how I minimize risk. Just pull up the 1 minute. As you can see, price did this leg and then it failed to check out the lows and then it went high. I'm watching the charts. Then it went low again, still failed to check out these lows. I put this fair value gap here on the 1 minute. I'm expecting price, if it is bullish, no, if it is bearish, to just use this fair value gap and then go down. But if you go to the 15 seconds, if you go down to the 15 seconds, price has to use that fair value gap and go down if it's bearish. But if it's bullish, since we saw the SMT, it will disrespect that fair value gap. It will not even consider it as resistance. It should just go right above it. We can use that. Oh my god, man, we can use that as a trade. Can use that as a trade. Can use that as a trade, man. It's time to lock in. It's lock-in season. It's lock-in season. It's lock-in. We have to lock in. Make money off these charts, man. What is it doing, bro? What is it doing, man? Show me the 15 seconds, dog. Please don't play with me, man. Come on, dog. What are you doing, bro? Oh no, man. Damn it. Please, bro. No. As you can see, guys, I'm disconnected. Disconnected from the net. And I really wanted to see that 15 second 15 seconds entry. That would have been a really good entry. I don't like being disconnected, man. And I was really getting into my flow state now. After 30 minutes of recording, I was really heading into that flow state. Yeah, but like guys, with everything I've shared, we can become profitable. Can become profitable. Can become profitable. I started applying this thing this month end. No, not this month end. This month. Let me show you. I have taken 8 trades. The worst day, I've lost 21 rands. best day of 166. Taking two trades, three trades, and one trade. So I win 50% of my trades. I win 50% of my trades, man. And my wins are much bigger than my losses. My wins are much bigger than my losses. Makes it quite easy for an individual to become profitable if they can manage their risk well. Because as you can see, I lost 22 rands. But here, I took three trades. I remember the other one yielded 90 rands, the other one 60 rands. Then I forgot the other one. And then today, I took a trade. That one of gold yielded 60 rands. So these two trades, the other one was from holding euro. The other one I don't remember. Then these two I don't actually remember them also. So I have a two cap trade per day, but on this day I really saw A plus setups only. Hence I went for the kill and took like three trades and won them all. And then today it was an A plus setup on gold. Took the trade. I had a 1:2 or 2.5 to reward, if I'm not mistaken. 246. No, I think it was 1:3 because I usually risk 20 rands on a single trade. But I have invalidation level since when it gets to 18 rands and so on. This one I wasn't really paying attention to these two trades after I've taken them. Hence the losses were stretched. Look at May. In May, I just funded my account on the 20th and then I took this trade, lost. And then this one, this day, I took two trades, lost. This week was very bad, man. This week was very bad. As you can see, I also took 8 trades from this month. But I only won how many? 2, 4. I only won 4 trades. I only won 4 trades. And then here I took 2, 4 trades. I lost 4 trades. This is when I had no risk management plan. I was just trading, putting my stops here and there. I had no risk management. So I went down 150 on May. And then came June. I'm up 108 on June. I'm up 108 because I started implementing that thing of risk management. Risk less than 20 bucks, aim to make 60 bucks or even 40 bucks. That's all right. Just make 1:2 at least. Okay, guys, network is not networking. I think I'll end the video here. Thanks, man.